Hey everyone, Rosario here. In this video, I'm gonna tell you how I doubled my investment in only 6 months with relatively low risk. I'm gonna try this again in the near future, and you can too. If you're looking for a story of how I YOLOed my life savings into Dogecoin or some hitherto unknown NFT, you'll be sorely disappointed. Instead, this is a strategy that is significantly less risky than jumping onto a crypto bandwagon. Sure, it's less well known, but as far as I know, anyone can do it. And if it's done right, it can be very profitable. But before I tell you how, make sure you smash the like button and share the video so that I can keep making videos like this and so that we can keep growing our wealth together. Back in November of 2020, last year, I invested in a pre-IPO stock. I had never done this before, and I didn't even know that it was possible for a non-accredited investor. Let's take a step back. First, let's talk about the company. FLORA Growth is an internationally focused cannabis company that leverages natural, low-cost cultivation practices to supply cannabis derivatives to its diverse business divisions. Basically, they're a weed company. What the company does is less important for this story, however. What's really important is that I was able to take advantage of something that was previously only accessible to hedge funds and wealthy insiders. I was able to buy shares of FLORA before the company was publicly listed. If you've ever taken a finance class, you probably know that IPOs are historically not great for retail investors. On average, people who invest soon after a company goes public lose money. On the flip side, if you're lucky or connected enough to get in pre-IPO, you start to make big gains. Thanks to some recent legal changes allowing non-accredited individuals to invest in private companies, perhaps the tides are changing, and the little guy will be able to profit from initial public offerings just like the big boys, banks, hedgies, and venture capital funds. Here's the story of how I was able to double my investment in 6 months. Perhaps you can find a similar deal to this and take advantage of it in the near future. Back in November, I got a call from my father-in-law, John. We're on good terms, and he's a great guy, so I was open to whatever he wanted to tell me. He let me know that he'd invested in a cannabis company. I was surprised because he's a smart guy, not to mention a savvy investor, and a lot of recent cannabis companies have not fared particularly well over the long run. You don't have to be a genius to read this chart of Aurora Cannabis's performance over the last few years to see that the cannabis boom had gone bust back in 2019. John told me that this company was different in a few key ways, and that this opportunity wasn't just about YOLOing on a new cannabis play. What it really is about, he told me, was getting in before the company went public. So why is it such a good opportunity? It really all comes down to supply and demand. Historically, the stock market has returned about 10% annually. The stock market is composed of publicly traded companies, which means that the shares are accessible and can be bought and sold by anyone. Publicly traded companies have a high volume of trading compared to private companies because it is easy to buy and sell these shares. Just download Robinhood or Wealthsimple Trade and you're off to the races. It's more difficult to buy and sell shares of a company that is not publicly traded, so that means the trading volume is low. To me, a garden hose is a great analogy here. When the water turns on, that's like an IPO. Before the IPO, anyone who is able to buy shares takes the risk that the company never goes public, basically that the water hose never opens. But here's the thing, once a company reaches a certain size and profitability, the odds that they will go public increase dramatically, so the risk of failure is lowered. Pre-IPO, there's no way to trade, so there's a lot of upward pressure on the price. No one is selling, but there are people waiting on the other side of the IPO, retail investors waiting to buy, or drink the water, or collect it in their buckets to sell later, in our analogy. On IPO day, the floodgates open, and there's often a spike in prices as retail investors try to drink from the stream of water flowing from the hose. Even though there are a lot of people trying to dump their shares for a quick profit, there are more people on the other side waiting to buy those shares so they too can turn them around for a quick profit. Because there are more buyers than sellers at this point, the share price jumps immediately after the IPO, while retail investors scramble to get on board. Of course, this effect quickly changes as the IPO holders continue to dump more of their shares onto the market. Once the water pressure dies down and the initial flood of buying and selling wears off, this is where the price drop begins to happen. All of the retail investors who bought post-IPO are left holding onto buckets of water, shares, and there's no one there to drink the water or to buy from them. In this way, the lucky few who are able to get in pre-IPO and sell their shares on IPO day or soon after will turn a tidy profit. They had access to a pressure valve. Before 2012, this pressure valve was available only to hedge fund managers and accredited investors. Now, however, it's available to anyone with some savvy who can navigate the private equity landscape. So what did I have to do? To be honest, it wasn't that difficult. FLORA made it relatively straightforward. I simply had to submit some documentation confirming my interest in investing in their Regulation A financing round. I was able to invest in the company at 75 cents US per share and get a warrant for half a share at $1 for every share that I purchased. In all, I invested $6,000 US for 8,000 shares of the company. After a 3-for-1 reverse stock split, I ended up with 2,666 shares and 1,333 warrants, which would allow me to purchase 1,333 shares at $3 per share. On IPO day, of course, the stock market opened at $6 per share. It looked like I had quickly more than doubled my money. Unfortunately, I was unable to sell my shares on day one because I didn't have access to the brokerage that FLORA had deposited my shares into. I am disappointed about this and will make sure that for any future pre-IPO purchases, I know how to sell my shares on day one. While the stock price has since fallen to about $4.03 per share, I'm still well in the money on my investment. If I sell my 2,666 shares, I'll have $10,744 for a profit of $4,744. But that's not the whole story. I can also buy and immediately sell my 1,333 warrants. I'll buy them at $3 per share and sell them immediately at the market price, hopefully still $4.03. If that's the case, I'll spend $4,000 and earn $5,372 for an immediate arbitrage profit of $1,372. That will bring my total profit to $6,166, or more than 100% profit on my original $6,000 investment. I've yet to sell on my shares because they haven't arrived in my Canadian brokerage account as of yet. Hopefully that happens soon, knock on wood. If all goes well, I'll try to repeat this performance with more funds on a pre-IPO company. Of course, the stock could fall drastically before I can sell, in which case I'm out of luck. The key for next time is making sure that I have access to the shares on day one by transferring them quickly into my brokerage account. So what do you guys think? Is investing in a pre-IPO stock a great way to quickly grow your investment, or is it too difficult or risky for your liking? Let me know down in the comments below. I, for one, am excited to try this again and see if I can leverage this newfound access to private equity to continue to grow my wealth. For now, guys, that's all. We'll talk to you in the next one. Peace.